That's close enough. It's Thummel. That's close enough.
Thummel. All right. Thank you. And I'm so glad to have you here today because it's interesting. We've actually asked a lot of energy followers who don't want $100 a barrel oil. The investors don't really want it. The companies don't really want it. Is it going to happen anyway?
Yeah, well, so right now, I think, the setup for $100 oil is possible. If you think about what's happening, we've really got global oil demand that's approaching or reaching where we were pre-2019, pre-COVID. But yet supply has not kept up. OPEC is not keeping up. The U.S. is not keeping up. So as a result of that, we've got a big mismatch between supply and demand. You've got inventories falling. And frankly, we've got oil demand that's going to increase into the summer, which really is a setup for potentially higher oil prices from here.
Yeah, we're already looking at prices at the pump at $3.34 a gallon on average. That's the highest since September of 2014. And they haven't even priced in this recent uptick. And we already did the SPR release. Do you think they would do another one?
Yeah, I don't know if an SPR release will help much. Usually in environments like this, what happens is you see demand response, right? So you see people going to more mass transit. Well, I don't think that's going to happen now, right? I don't think people are entirely comfortable moving to mass transit yet. Now, you might see the term staycation return right this summer. Remember that term a few years ago? That's when people didn't get on jet planes, didn't get on airplanes, they didn't get in their car and go anywhere. They just stayed at home, stayed in their hometowns. That's possible. But also remember the flip side of this. We've got higher GDP than when oil was $100 last time. We've got higher disposable income, higher savings rate. So I think the consumer can probably handle this type of an oil price for a short period of time.
Right. But the question is, how long does it last? So we also learned just a few moments ago that U.S. energy firms, for the fifth week in a row, added oil and natural gas rigs. That's the longest stretch we've seen since November. Is there enough wiggle room in the industry to bring more supply online to help prices adjust downward that way?
Yeah. So the U.S. Oil and gas producers have been pretty disciplined. Oil production in the U.S. is still 1.5 million barrels, probably lower than it was pre-COVID. So there is potential to bring additional supply on and help really balance the global market. So yeah, that is quite possible, and that would help and help improve the prices. As long as the investors can still earn a return and the companies can deliver that return, I think that would be a great thing for the sector and for investors.
All right. So we'll see in the meantime. Let's boil this down for investors. A lot of people saying, well, if this is a situation that's almost unavoidable, then let's at least get in on the other side of it. What are the companies that you think would benefit here if we cross above 100?
Yeah, your previous guest said energy is cheap. The whole sector is cheap. I agree with that 100%. But if you think about where do you go? First of all, what we've learned is earnings matter, cash flow matters. Exxon delivered that this week. They delivered great earnings. They gave a glide path to really strong cash flow, 4.5% dividend yield, fantastic dividend yield. The company is just hitting on all cylinders. The last time oil was 100, Exxon was a $100 stock, and it's $75, $80 today. That's one way to play it, we think. Another way is energy infrastructure. That's at Tortoise, that's one of our places that we really like. Plains All-American is an example of that. A 6% dividend yield. One area in the U.S. that is actually growing oil production is the Permian Basin in West Texas. You've probably heard about it. Most everybody's familiar with it now. That's been growing substantially. Plains All-American is going to benefit from that. They can actually grow their dividend next year in a rising interest rate environment and lower debt. That's a surprise as well. One last area, though, that I think that's really interesting. Remember a few years ago when we had the Free Britney saga? Well, in natural gas really needs to be freed as well. And think about natural gas. Natural gas needs to be unaffiliated with oil, right? There's a lot of positive aspects of natural gas that can stand on its own because natural gas can actually decarbonize the world, but also be and contribute to energy security for the U.S. And that's really important. So the way we like to play that is through Cheniere Energy. It's the largest U.S. exporter of LNG. Yep. It's been doing really well in this environment when European prices have been so high.
Free natural gas. I don't know if that'll become a rallying cry, but certainly we've all woken up to how important the domestic nat gas industry is here. Rob, thanks for all your time and thoughts here. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.